Good morning, everybody, and welcome to today's webinar with Aspire Mining Limited. I'm Dannika Warburton, the Investor Relations Representative for Aspire, and I'm delighted to be joined today by Sam Bowles, the CEO of Aspire, who's going to give us a bit of an update on the Ovoot Coking Coal Project before we jump into a Q&A session. So without further ado, I'll hand over to Sam to provide that update.
Okay, good morning, Dannika, and good morning, everybody on the call. It's a pleasure to be here, and I'm happy to be providing an update to you all and addressing some questions that have come through in advance of this call. And please feel free to log more questions as we go through this session. I'm going to assume that most people have already seen our latest investor presentation that we've posted to the ASX late last month. Generally, I'd just like to outline that the project is moving forward. We have finalised our JORC estimate. We've had the ITR completed. All this work is validated that we're sitting on a great project, and we're just about to push the button on project development. It's got really exciting project economics. We've got a plan that's going to work, a plan that the community is generally happy with and accepting of, and we're progressing through with all the pre-construction works necessary to allow construction to proceed starting this year and eventually provide coal on by the end of 2026.
Thank you, Sam. And as Sam mentioned, please do feel free to ask questions using the Q&A feature at the bottom of the screen at any time. So I'm going to jump straight into one from James. He's mentioned that financing is the last major hurdle. Can you update us on project development timeline and funding plans, and whether delays could impact the broader schedule?
Certainly. Look, the funding for the Ovoot Coking Coal Project development is not a simple affair. We're looking at multiple sources of financing to fund various aspects of the project construction. Presently, we're dealing with a number of debt providers looking to fund various aspects, including things like the tractors for the road transportation fleet, the trailers for the road transportation fleet, the wash plant, and other infrastructure development. This is all generally progressing well. At this stage, we're not concerned that funding is going to delay project construction, but certainly, as with any project, there is some risk that funding or delay in funding could cause delay in construction, but we're doing everything that we can to ensure that that isn't the case.
Okay, thank you, Sam. And Rob mentioned on the recently announced trailer MOU, could you explain how this will improve logistics and reduce costs during operation?
Just for general understanding for people on the call, trucking of coal in Mongolia traditionally is very different to what you would expect to see in Australia, where most of our shareholders are from. The trucking here has typically involved quite cheap, very heavy-duty equipment, and it's been done across privately built and operated roads. In our solution, we're looking at using equipment that is truly world-class, from tier one vendors, very powerful, very safe tractors. And these trailers in particular, their advantage is that they have a very good payload efficiency, meaning that for every ton of vehicle, there's more payload in that and less steel. This will ensure that our trucking is productive, and that's the key thing to ensuring that it's cost effective. By being productive, we'll be able to drive our unit cost well down and ensure that our trucking is very competitive.
Thank you, Sam. And Matt has asked, with the coal handling and preparation plant and the rail tenders, you've now issued those. Is that correct? Yeah. What's the timeline from tender submission to contract award and then construction starting?
Yep. So just to clarify on this, the tender was issued in Q4 last year, and we've received submission from multiple international vendors who have given us both conforming proposals and non-conforming proposals for the infrastructure that we need built. We've been focused on evaluating these submissions, and we've shortlisted these to a smaller group of these vendors and gone back to them with requests to update their submission, targeting some compliance on things that were very important, and also to take advantage of some of the non-conforming offers or ideas that were presented in the tendering process. This is going to be drawn to a close quite soon. I expect that we'll be able to award contract within this quarter. All of the bidders who participated in the tender, they're ready to start work. And we expect that the work on the detailed design for construction would commence immediately upon award of contract. And that's typically a couple of months to complete that. When that's finished, then the work start for procuring the equipment and materials necessary, and then the commencement of actual construction work. We're really targeting for foundation works to commence in 2025, and that would allow for the construction to be completed in 2026, commissioning ahead of first coal mining and processing in Q4 2026.
Okay, perfect. Thank you for that summary. Jim has asked, sort of ties in because it's a question on the progress at Ovoot, but specifically relating to your community engagement efforts, if you see any foreseeable roadblocks.
Sure. I think just firstly on this, what's important to understand is an enormous amount of work has been done by our team on the ground here, particularly in the last 1 to 2 years. This on-the-ground work has been done to actually visit all the people who are living in reasonably close proximity to our planned infrastructure and giving them clear understanding of what our intentions are, what we're planning, how the project would operate, how they could benefit from our project going into operation. It's not an unusual thing for any mining project to be facing some pushback from community and NGOs. We're dealing with that like any other company has to face this. But here, I think for broader shareholder understanding, there is some sensitivity for developing this project in Ovoot, which is a different location in Mongolia compared to where coal mining is traditionally undertaken. And the people who are living in Ovoot have some concern about what they see as typical coal mining practices in the South Gobi region of Mongolia being brought into Ovoot and having potentially a negative impact on them. Now, we've been very clear with the community that we're not looking to emulate the existing practices. We're looking to deliver a step change in what we're doing and introduce world-class, modern, responsible mining practices and ensure that we protect the local environment and that we provide benefit to the local communities. This has taken some time to address to everybody, but now we've got local communities who are actually quite excited, that the project is moving and really actually becoming impatient. They want us to move quickly, just as I'm sure all of their shareholders do.
The reason being there's going to be so many jobs created and the economic impact is going to be really beneficial. We did get a question through from Sam actually on the public roads and the trucking distance. Could you go into a little bit more about the plan for the new highway that is proposed?
Important point of differentiation between what we're planning and the typical coal mining practices in the South Gobi region of Mongolia. Our project is approximately 190 kilometres from Murin, which is the capital city or the administrative centre of Ovoot. Our route to reach to Murin is along the same alignment as an existing state road alignment that is at this point unformed and unpaved. Our proposition is that we would like to develop that road under public-private partnership agreement so that it can be constructed earlier than what it would be without private funding. The road would be designed to the road will be built to the same standard as national highway between provincial centres. And there'll be further extension of this road in the other direction to the city of Uliastai at a later date. Because this road will be designed, built to national highway standard, we will use vehicles on this road to transport the coal that have axle loads in compliance with the national standards for use of vehicles on public roads. And this is, again, a key point of differentiation compared to typical coal haulage practices in the South Gobi of Mongolia, where very, very heavy, very overloaded trucks are used with very high axle loads that damage the pavement, even of the special purpose roads that they're operating on. When these vehicles operate on normal public road, like what we're planning to build, they do cause an enormous amount of damage. And because of this, and because it would be our investment and our interest to ensure that this road that will be built is maintained and maintained in good condition, we want to ensure that we don't use those kinds of vehicles, and we want to use vehicles that the road can support. And this is what the economical solution is. It's using these modern, high-powered tractors, high payload efficiency trailers, and operating a system to ensure very productive trucking operations so that we can drive the unit cost of operation down.
Thank you, Sam. I've got a question from Ben now. He would like to know the key differences between, say, Aspire and other ASX-listed coal stocks. How do Aspire's project economics stack up against some of your ASX-listed peers?
Well, look, I think where we sit now, like we are at the cusp of project development. We have an enormous resource in the ground, and it's very high quality. I don't know of other untapped coking coal deposits of the size and quality that we have. Our location being so close to China is an excellent advantage. The government here in Mongolia is very supportive of mining in general. They understand that mining export revenue is really driving the economy in Mongolia. There's great diplomatic relations between China and Mongolia. China's got an insatiable appetite for resources generally, but certainly coking coal now and into the future. Very bright future in terms of steel production and the need for China to import coking coal to sustain that steel production. Talking with some of the tenderers for the wash plant and ERT infrastructure construction who are based in China, they're very, very, very positive on the requirement for coking coal of the quality that Ovoot can produce, needing to be imported into China across both the short, medium, and long term. So I think that's probably a key point of difference for us in that we've got that closeness to China, we've got the product that they need, and it's an untapped deposit currently.
Yeah, so very strategic advantage for Aspire being so close and having that great relationship between China and Mongolia, the trade relationship. Do you think that the US-China trade tensions and the new tariffs, is that going to have an effect on Aspire, do you think?
Let's see how long it takes for those tariffs to be implemented or changed or rolled back. But if they were to continue, two things will certainly happen. One is that the import of coking coal from the United States into China is likely to evaporate. They're not a huge importer of coking coal from the United States, but China still does import about 10 million tonne a year of coking coal from the US. Mongolia is the largest exporter of coking coal into China currently, with roughly 50% of all coking coal imported into China being from Mongolia. And I think Mongolia is well positioned to fill any gap that's caused by the US imports not continuing from the US. And I think the other interesting thing for us is that with these tariffs in place and no steel being produced in China bound for the United States, it's likely to be a drop in steel price, and I think that that's going to be beneficial for us during construction of our infrastructure.
Well, very interesting. Thanks, Sam. I do have a follow-up question from Ben. He has asked, could you go through the key advantages of operating in Mongolia versus Australia, particularly in terms of royalties, permitting, official regime, as it relates to coking coal developers or producers?
Look, firstly, in terms of things like the royalties and the tax regime, generally things in Mongolia are very stable. The royalty regime has been in place for many years without change, and it is quite a fair system. It encourages producers to value add to their product before export, with reduced royalty rates applicable to value added rather than raw products. And that's one thing that drives us to ensure that we're washing the coal from Ovoot prior to export. The royalty rate, the maximum royalty rate currently on coal, coking coal, is 8% of the revenue, and I think that's actually quite favourable compared, at least as an example, in comparison to the current regime in Queensland. And that's also another reason why we're probably a standout opportunity compared to our ASX listed peers who are operating coal projects in Australia. I think further to that, in terms of the question in relation to permits, I think a lot of our shareholders have understood that we've gone through and obtained all the major permits that we need to develop the project. These are the major things. They're the reference points under which other minor permits at local government level would refer to, so they're normative references. Generally, in my time in Mongolia, I found that the project permitting process, whilst it can be bureaucratic, is actually fairly straightforward, and the timing to obtain these types of permits is actually much better than what you would face trying to do the same thing in Australia. The governance has improved or strengthened in Mongolia across environmental regulation, safety regulation, general project permitting during the 15 years that I've been working here. That's a good thing for the country. We've got a team that's well equipped to deal with attaining all the necessary minor permits now to allow us to progress with construction and operation.
Thank you, Sam. And another Sam has asked in the chat on what are your long-term pricing assumptions for coking coal? How do you currently see like market dynamics influencing your model? He mentioned that in the ITR, it assumes a long-term delivered fat coal price of US $230 a tonne, including VAT.
Yes, so just to be clear, that $230 a tonne is landed cost on the China side of the border on a stockpile ready for onward sale. That pricing was developed by a company called Fenway. They're a very significant player in the Chinese coal industry. They have an enormous amount of data across all of the Chinese coking coal, thermal coal, steel, iron, all that space they track very carefully. The pricing was calculated looking at forecast market reference or market index pricing at key locations, particularly around Tianjin and Hebei province, comparing against other fat coking coals of similar quality that we're expecting to produce from Ovoot, and netting back to the ports of import into China, looking at the internal transportation costs in China. But what this study really determined was that there is an existing shortfall of fat coking coal supply into our target market regions in northern and northeastern China. At the end of 2023, that was approximately 15 million tonnes a year shortfall, and they're forecasting that deficit was going to increase to about 19 million tonnes per annum by 2029. That shortfall is in the Chinese provinces where the coke is being manufactured. They're not able to produce enough fat coking coal inside of that province to support their coke production requirements. And they're importing fat coking coal from other provinces in China, from Russia, and also from some other operations in Mongolia. And generally, the Russian coal has quite high transportation cost. The Chinese coal has quite high production cost. And we have a solution that will fit into that gap in market where we know that we'll have very low mining costs, and we've got a manageable transportation cost, and we expect to be quite competitive with the other producers currently supplying to these regions. With the $230 a tonne price, I can understand that Shareholders might be concerned that the current pricing doesn't reflect that, and it's true that in the past 6 to 12 months, the price has come off on coking coal. But we all understand that coking coal is a cyclical commodity. There will be price fluctuation. Over the long term, we're confident that the $230 a tonne is a representative price. And even at current prices, which are down on that, and prices could even decrease quite a bit further, we still have a profitable operation planned.
Thank you, Sam. And we've got a couple more questions that I'll try to squeeze in. If anyone does, if we haven't got to your question, please do feel free to email us and we'll get back to you directly. But Alex has asked, has queried how you're managing spend and funding, especially with recent hires, and how are you balancing dilution and debt for shareholders?
We're very focused on managing the existing cash in bank that the company has. We're carefully working on the pre-construction work and minor construction works with funds that we have available. This is important to show the local community really that the project is moving forward, and also satisfy their eagerness that we get going and continue to provide opportunities and benefits to the community, so we have their continued support. We're confident that we will be able to raise a significant proportion of our project financing required through debt, and we're certainly very focused on minimising any dilution required as a result of any dilution that would result from equity raise. So our first and foremost priority is raising debt to fund the project construction. As I said earlier, there's advances being made on multiple fronts in that regard, and I think shareholders should be comfortable that we're focused in this way and we're not looking to cause any unnecessary dilution and minimise any dilution if it is absolutely necessary.
Perfect. Thank you, Sam. I guess to wrap up, would you be able to outline what the next 12 months looks like? A bit of a roadmap of key milestones that investors should be aware of.
I think the next 12 months is going to be extremely busy. It's going to be a very exciting time as we move this project through construction towards operation. I think some key milestones that people could be looking out for, and just understanding that there are many things happening in parallel on multiple fronts. We're advancing. Key things that could be coming out in the near future: finalising contracts for design, procurement and construction of the coal handling and processing plant and the Erdenet rail terminal coal handling infrastructure. We're going to be seeing construction work commence on the site with a focus on building a permanent camp facility that we will use to house both the operating workforce in the long term, but also construction workforce in the short term. We will see mining activity commence at Ovoot this year. The pre-stripping will start and the intent is to commence that as early as possible and ramp up production slowly, smoothly, but ensuring that we do it safely whilst maximising the training of the local people and providing maximum opportunity of locally based employment, rather than bringing in personnel from either the capital city here, Ulaanbaatar in Mongolia, or elsewhere in Mongolia, just ensuring that we're living up to our commitment to the community to ensure that we provide them with the most opportunity. Apart from that, towards the end of the year, as I mentioned earlier, I'd like to see that the foundation work for the key infrastructure like the coal handling and preparation plant would commence. And then all of that is leading to having first coal available for processing, transportation and sale by Q4 next year. Exciting
catalysts ahead. And you should be commended, Sam, you and the new leadership team, since you've come in, a year and a half, 2 years ago, driving the community engagement and getting that social license to operate, which is really what's underpinned a lot of the progress that you've been able to make. And we'll wrap it up there, right on time. So thank you again. Thank you, Sam, and we will speak soon.
Thanks very much, Dannika.